You weren't supposed to hear about this, but gold didn't just crash. Silver didn't just plunge. What happened today was not a normal sell-off. It was a message, a signal, a controlled detonation inside the safest corner of global money, and most people are still watching the wrong screen. Because when gold drops nearly 10% in hours, when silver collapses 15% like gravity suddenly turned off, that isn't market volatility. That is a trap snapping shut. That is power moving in silence. That is the system reminding you who actually controls price and who only watches it. And if you want real financial truths they don't teach, hit subscribe and turn on notifications. You don't want to miss what's coming, because what you're about to understand changes how you see money forever. This isn't just about metals. This is about psychology, control, liquidity, and the invisible war between the public and the people who position first. It started like a headline, simple, clean, almost boring. Gold and silver plunge after Fed chair nomination. But that's how it always starts. The most dangerous financial events always arrive wearing a suit and a press release. Gold had been unstoppable. January was a fever dream. Record highs, new all-time levels, the kind of rally that makes retail investors feel smart, safe, chosen. People were saying gold was the last honest asset left. Silver was moving like a rocket strapped to desperation. Social media was flooded with predictions. 6,000 an ounce, 10,000, a new monetary age. And then the floor disappeared. One day, a single day. Gold down 9%, silver down 27%. That's not a pullback, that's an execution. And the public asked the wrong question. They asked, why did this happen? Instead of asking, who needed it to happen? Because markets don't move like this without permission. Not at that scale. Not in assets that central banks treat like religion. What triggered it was a name, Kevin Warsh, nominated as the next chair of the Federal Reserve. And the moment that news leaked, the dollar jumped. Gold instantly collapsed. Silver followed like a casualty. The story they gave the public was clean. A hawkish Fed means higher rates. Stronger dollar means weaker gold. Nice, logical, digestible. But that's not the real story. The real story is what happens underneath. The Fed isn't just a central bank, it's a control room, a psychological weapon, a narrative engine. When the Fed chair changes, it isn't just policy. It's a signal to institutions about what kind of pain is allowed next. Warsh is seen as someone who wants balance sheet reduction, less liquidity, tighter money. That means one thing to the elite. The free ride is over, and when liquidity tightens, everything reprices. Fast. But here's where it gets darker. Because the crash wasn't just emotional, it was mechanical. The CME exchange raised margin requirements, meaning suddenly it cost more to hold futures positions. Leverage became heavier. Speculators couldn't breathe. And when leverage can't breathe, it liquidates. Forced selling, margin calls, positions wiped out, and that's when it turns from a drop into a waterfall. This is how modern markets kill. Not with bullets, with margin. With rules that change overnight. With liquidity traps disguised as risk management. Retail thinks price is natural. Institutions know price is engineered. The moment margin requirements rise, the game changes. And only the people closest to the control panel know it's coming early. So ask yourself, who was over-leveraged? Who was euphoric? Who was holding gold at record highs, convinced it could never fall? The public. And who benefits when the public gets flushed? The people waiting underneath. Because this is the first hidden truth of financial power. Crashes are not accidents. They are transfers, silent wealth transfers, from emotional hands to disciplined hands, from retail to insiders. And when gold drops $900 from its peak, that is not lost money. It doesn't vanish, it moves, it changes pockets. That's the real economy, not production, not GDP, transfer, extraction, psychology. And today was a masterclass because the fear wasn't just in metals, it spread. South Korea's stock market down 5%, currencies dropping, bond yields rising, oil plunging nearly 5%. Everything shook, like the entire global system felt a sudden tremor. And the public sees chaos, but the elite see choreography. They see liquidity rotating. They see risk being repriced. They see the herd being steered, because the human mind is the real battlefield. Price is just the scoreboard. Fear is the weapon. Greed is the bait. And markets are designed to exploit both. Gold was supposed to be safe. Silver was supposed to be the breakout. People were buying because they were scared of inflation, scared of currency collapse, scared of geopolitical war, scared of everything, and fear makes you chase protection. But here's the secret. When everyone crowds into safety, safety becomes the most dangerous trade. That's what happened. Gold went parabolic. Silver went insane. It wasn't sustainable. It was crowded. And crowded trades are slaughterhouses because the elite don't buy what you buy. They buy before you. Then they sell into your certainty. That's the cycle. Accumulation in silence, distribution in euphoria, collapse in panic, reaccumulation in despair. It's an asset repricing cycle, powered by human emotion. Retail thinks charts are technical. Institutions know charts are psychological. Every breakout is a baited hook. Every rally is a liquidity harvesting event. Because whales need your buying to exit. They need your FOMO to unload. Crypto works the same way. Different asset, same predator. Whales push price into hype zones. Retail piles in, thinking they're early. Then liquidity gets drained, and suddenly, a random crash. But it wasn't random, it was extraction. Gold and silver just did the exact same dance, and most people will never admit it, because admitting it means realizing you're not participating. You're being used. So when Warsh gets nominated, it's not just politics, it's narrative engineering. The media tells you, Fed shift. But the deeper reality is liquidity shift. The system is preparing for the next reset. Currency debasement doesn't stop, it never stops. Fiat always decays. But the timing of when assets surge and when they get punished, that timing is controlled. Gold is the mirror of trust. When gold rises, trust in currency falls. That's why gold matters to power. It's not jewelry, it's a referendum. So when gold runs too far, too fast, it creates instability, it creates questions, it makes the public look up. And the system does not want you looking up, it wants you looking at the paycheck, the mortgage, the daily drama, not the monetary mechanics. So what happens? A correction, a healthy pullback, a margin hike, a narrative shift. And suddenly the public is reminded, you don't control the market controls you. The psychological damage is the point. Because the real goal is not price, it's behavior. They want retail shaken out, exhausted, hopeless. So you stop believing in hard assets. So you go back to paper, back to the system, back inside the cage. That is the psychological control loop. Hope, euphoria, FOMO, crash, fear, capitulation, silence, repeat. And every cycle, the elite accumulate more because they don't play with emotion. They play with patience. They play with time. They play with your reactions. Today's crash wasn't the end of gold. Analysts are already saying that. Deutsche Bank still bullish. JP Morgan still calling for 6,500 by year end. Wisdom Tree expecting a rebound. Of course they are, because the long-term direction is up when fiat is decaying. But that's not the point. The point is the weaponization of volatility. Gold is up 70% year over year, and still it can drop 10% in hours. That's the lesson. Nothing is safe from engineered liquidity events. So what happens next? Here's the twist. The public thinks this crash means gold failed, but the elite might see the opposite. A flush was required, a cleaning, a reset of positioning, weak hands removed, leverage destroyed. Now the board is clearer. Now accumulation can begin again, quietly, because the people who truly believe in gold don't buy headlines. They buy blood. They buy when the public is terrified. That's how wealth transfers happen, not when CNBC is cheering, when the screen is red and people can't sleep. And crypto whales are watching this too. Because gold and Bitcoin are linked in the psychology of escape. When gold flushes, speculative money shifts. When liquidity tightens, risk assets bleed. When the Fed signals hawkishness, everything reprices. This is one giant ecosystem. And today was a tremor in the foundation. Oil dropped because geopolitical risk eased. Stocks dropped because fear rose. Currencies moved because the dollar strengthened. Everything is connected through liquidity. Liquidity is the hidden god. And central banks are the priests. You are not watching markets. You are watching liquidity tides. You are watching elite positioning. You are watching silent resets. And the average person is watching price like it's random weather, but it's not weather, it's warfare. Retail investors are trapped mentally. They buy high because they want certainty. They sell low because they want relief. Whales exploit that. Institutions design around that. Media amplifies that. Fear is profitable. Greed is predictable. That's why the disciplined win and the emotional lose. So the real question isn't, will gold recover? The real question is, did you just witness the system tightening the noose? Because every crash like this is a reminder. Your savings are inside a structure you don't control. Your currency is melting slowly. Your assets are repriced violently. And the people with access to policy signals, margin rule changes, liquidity corridors, they move first. You move last, and the gap between first and last is where fortunes are made. This is why gold exists, because it is outside. It is scarce. Only about 216,000 tons ever mined. It cannot be printed. That's why it scares them. But even gold can be weaponized short term. Even gold can be shaken. Because the system doesn't need to destroy gold. It just needs to control your belief in it. Belief is everything. Money is psychology backed by force. Gold is psychology backed by scarcity. Crypto is psychology backed by code. Everything is a belief system, and belief is manipulable. Today was a belief test, a fear injection, a cleansing. So what should you take from this? That markets are not fair, that safety trades can become slaughterhouses, that volatility is not noise, it is strategy, that elite money plays longer games, that your mind is the battlefield. And if you can control your mind, you can stop being harvested. Because the biggest secret is that the market isn't designed to make you rich. It's designed to make you react. The ones who don't react, the ones who study cycles, liquidity, positioning, psychology, those are the ones who survive. And eventually, those are the ones who win. So here's my question for you. Do you think this gold and silver crash was a natural correction or a controlled reset by the elite? Drop your answer in the comments and send this to someone who needs to hear it, because most people are sleepwalking through the most dangerous money game in history. Subscribe, turn on notifications, and stay close, because the next move won't be announced. And remember, the crash isn't the end. It's the invitation. The invitation to see what's really happening before the next reset arrives in silence.